Defying numerous calls for a housing crash, the U.S. housing market is posting record high home prices once again. In today's video, we're going to look at what's behind the latest price increases, as well as assess the factors that could push the market higher or bring it down in 2024. Let's get into it. The latest data from Redfin, a national real estate brokerage, shows the U.S. median home price came in at $421,000 in January, which was up from the $416,000 in December and represents an all-time high. Yeah, that's right. At a time when the national market appears to be frozen, the U.S. median price has reached an all-time high. For most of our housing market indicators, it's hard to see how we got here. Home sales have yet to halt their downward trend and keep decreasing each month, and the sales to list price ratio has retreated from its gains last year. Both indicators suggest that demand is still weak. On the supply side, we've seen a halt to the collapse in new home listings, and they've actually started trending higher, but have yet to gain solid momentum as they have ticked down in the latest data. So, if demand is weak and supply is starting to loosen up a bit, why are prices reaching all-time highs? A lot of it has to do with which homes are selling. Sales distribution data from the National Association of Realtors shows the bulk of existing home sales are in the 250,000 to 500,000 range, with 44.4% of existing sales being in this range. This was up slightly from the 44.3% in December. We saw an uptick in the percentage of existing homes sold in the 500,000 to 750,000 range as well, from 16.7% to 16.8% in January. What we're seeing here is that homes are selling, the ones that are selling are skewing more towards the homes above the median price of $421,000. With affordability levels at record lows, it seems that the majority of buyers that can get into the market right now are higher income buyers. So even though we're seeing less and less homes being sold, the ones that are selling tend to be at the higher end of the spectrum, which can push the median price higher. This dynamic isn't likely to keep pushing prices too much higher, so let's talk about what could cause some big movements in the market in 2024. It's going to come down to what happens to mortgage rates and if we enter an economic recession. Let's start with mortgage rates. As of February 22nd, the average 30-year fixed-rate mortgage was 6.9% according to Freddie Mac, down from the peak of 7.8% last October. What has brought rates down from the peak last year hasn't been a result of the Federal Reserve cutting rates. All they've done is stop raising rates for now, but it has been market expectations of rate cuts on the way that is behind the recent decline in mortgage rates. In my recent video on the outlook for mortgage rates in 2024, I made the case that we could see a 5% mortgage rate by the end of the year if the Fed follows through on expected rate cuts. A lot of potential home buyers that are on the sidelines because of the 6.9% mortgage rate would be able to get back in at 5%. At the median home price of $421,000 and a 6.9% mortgage rate, the average monthly payment would be $2,218, assuming a 20% down payment. But if we reduce that mortgage rate to 5%, the monthly payment goes down to $1,808. That decline of $410 per month can be just enough for potential buyers that are just out of the market at current mortgage rates. Here's what we're looking at for that to happen. The Federal Reserve's next two meetings will be on March 19th and 20th. In the last month, they've signaled they will not start cutting rates at the March meeting, but we're looking for what they signal for the following meeting that will take place on April 30th and May 1st. If they signal that rate cuts could be on the way, then we are likely to see the bond market send the yield on the 10-year Treasury lower, and where the 10-year Treasury yield goes, the 30-year fixed-rate mortgage rate goes. You can see from this chart here how closely they move together. So we could get some additional relief on mortgage rates after the March meeting, depending on what signals the Fed gives to the markets. And then if the Fed actually cuts rates at that May meeting, it's likely to be party time for real estate again. Many home buyers would get priced into the market again, and supply is likely to loosen up, as well as homeowners who have been putting off listing their home will feel a bit more comfortable selling and buying another home as mortgage rates come down more. Because we could see both demand and supply increase at the same time, this should keep prices from going up too much. That's the positive scenario. Now for the bearish scenario. A U.S. economic recession. Even a mild recession could have a significant impact on housing demand through layoffs leading to lost income. It could hurt the supply side as well, as some owners may be forced to sell their home if they need to cash in on their equity to pay the bills. A drop in demand and a rise in supply would definitely push prices lower. In my latest video covering the economy, I highlighted how the overall economy is doing great for now, and a recession isn't likely in the next few months. But looking ahead to the rest of 2024, we have the risk of a collapse in the commercial real estate sector, which could lead to many small regional banks becoming insolvent. A banking crisis would have ripple effects across the economy and could light the fire of recession this year. The U.S. consumer is not in great shape either. Recent surveys showed that nearly half of Americans have less than $500 in savings. Because the average U.S. consumer is in a vulnerable position, any recession would likely not be a mild one and could have a significant effect on the housing market. I'll be covering all these developments as we get new data in, so if you haven't already, make sure you subscribe to this channel and hit that notification bell down below so you won't miss when those videos come out. And if you like this video, don't forget to give it a thumbs up to support the channel and help it grow. Thanks for stopping by, and I'll see you in the next video.